countries that are trying to, there are a lot of countries that are trying to play ball. Um, whether it be Mexico, Canada is its own separate thing. Um, you know, some countries are trying to play ball. Where that goes, I don't know, honestly. I think no one really thought he was going to do this. Um, I'll say this: his base. I was watching I was out before, so I wasn't able to see the press conference. I was watching it now. His base is cheering this on. His base has no idea what the hell is coming. They think this is the greatest thing. I was saying this earlier, maybe 5 minutes ago in the equity room. If you think you can take a country of 300 million people, one of the largest economy in the world, that is a consumption-based economy, and all of a sudden flip a switch, and then at 12 o'clock it's a consumption-based economy, and at 12:02 it's a manufacturing powerhouse, and everything's going to be hunky-dory, you got another thing coming. This just blew everything up. I was trying to figure out, just from an auto sector type of situation, because that's really where, because that's 25% that was just slapped on on top of the 2.5%. So right now autos are at 27.5%. Just so you should all know that it's not 25, it's 27.5. And I was trying to figure out, where's max paying? Max paying is basically every car. Every car is max paying. So right now you're looking at anywhere from $6,000 to $12,000 at a minimum, effective tomorrow, depending now on whether or not manufacturers are willing to eat it for a month, 2 months, a quarter tops, to see if this plays out. If they don't, it's good night, Irene, in the auto sector, because they're going to just stop. They're going to stop producing certain cars. They're not going to bring them in. This business of, oh yeah, and don't misunderstand, I'm not anti-American, but this business of come to America and build everything over here. Do you have any idea how freaking expensive it is to build anything here? Most states are at $15 minimum wage. Some are at 20. So your headcount alone is way more than it is in any other country. Then you got to account for what's it called? Warehousing, materials, marketing. Everything went up. So bringing it over here, you're not saving any money. In fact, it's probably cheaper. Let's say before today, as of yesterday, it was probably cheaper to do your building outside the US and bring it in, even paying the tariffs or whatever it was. It was cheaper to do it. I can guarantee you that this is going to upend the economy. We are now in the world of stagflation. Stagflation means high inflation and low growth. Now, what's the end game here? My opinion. My opinion is the end game here is to find a way to, sorry, I'm not looking at I have the channel of the screen, so I'll look at it in a minute. My opinion is, and I kind of said it a couple of weeks ago, is to force the Fed to cut rates. Find a way to get the Fed to cut 100, 150 bips, get us down to 3.5%, 3% Fed funds, which puts prime at about 6, and say, just kidding, and all of a sudden find ways to get exemptions and kind of reverse this. The problem with trade wars is nobody wins. And even if this goes on for, let's just say, 6 months, okay, it won't hit the general economy for another 12 months after that. Anything that happens usually takes about 18 months to cycle through the entire economy. So while the tariffs may come off, the effects will be felt for another 12 to 18 months. So this is not going to go away overnight. In fact, whatever he's trying to do here, even if he were to say, you know what, let me offset it by doing a federal tax holiday, it's not going to help because we don't have the budget to do it. So really anything that's going to happen to offset this pain is 2 to 3 years out and possibly at the end of his term. So this is a new era that we're coming into. Okay. This buy the dip mentality that everybody's been doing, that game is over. So I'll use an example in the energy markets. Up until COVID, or up until 2019, 2020, right before COVID, there was a money trade in the energy markets. It was pure money, and it worked for years. I would say it worked like a charm for 6 years without hesitation. The trade was be long crude, be short natural gas, and it was a crushing trade. People made a fortune. Then that trade ended. For years, it's been buy the dip. You have a president now that does not give, sorry, Steve, a rat's ass or two shits about the stock market right now. He does not care. If this thing crashes on his head, he could care less. And it's very obvious from what's going on. Okay. Now, because of that, this buy the dip type of thing, it's probably not going to work because no one's going to buy now because they have to find ways to mitigate risk. So what do? If you're in Max 7, let's say Max 7 names, and you've been in for the past 5 years, or at least from COVID, you're up thousands of a percent. So you're going to really sell your positions? No. But you're not going to necessarily be buying now. You may be starting to hedge. You may be, whether it be through futures, whether it be through options, you're not looking to buy right now. You're looking to protect what you have. I posted an article, and it's kind of getting messed up. Not messed up. It's kind of getting buried over. I'll have Steve kind of post it through. It's an article by the Holy Grail. What the Holy Grail says. The Holy Grail is PTJ, Paul Tudor Jones. Read the article. Take the 10 minutes, the 5 minutes, read the article. Yeah, there you go. Thanks, Chris. Read the article. That's what this game is all about. Nothing more. And anyone who tells you that it's about just clicking away and finding, making trades and making money, that's not what this job is about. It's never been about that. The reward is the byproduct of managing your risk. If you manage your risk properly, then you'll get a reward. Sometimes you won't. But at least you're managing your risk. If you do the exact opposite, you will be in the 95%, 90 to 95%. Just a fact. You can sit here, you can argue with me and tell me from today until tomorrow. I'm doing this a long time. I've seen hundreds, if not thousands of people, and they all come in with the same thing. And guess what? They all got laid out. Market says to them, thanks for playing, while they're being carried out on the stretcher. It's just a fact. That's what this game is about, risk and managing your risk. That's it. Okay. So now we have our backdrop of what is going on. Where are we? So let's think about what happens here. It's not just stocks that are going to get affected. Okay. So for those of you that are in stocks that are looking at certain sectors, let's pick energy because I happen to be staring at it right now. Okay. Crude right now is down about 3%. Gasoline is down about 3.5%. Natural gas is not getting hit as hard. It's only down 1.5%. Who can tell me? You can speak. You don't have to type. You can do whatever the hell you want. I don't care. Just do it one at a time, please. Who can tell me why crude's getting smoked or down 3%? Why is it getting hit? Who wants to take a guess at this? That's not a good enough answer.
My guess is because crude goes into everything that's going to be taxed.
That's one thing. That's one thing. In the chat, those are not good enough answers. Come on, think about it. Think about it logically. Don't try and overthink it. Think about it logically.
Economic slowdown overall.
Expand upon it. I want to get you thinking. Expand upon it.
Worldwide.
But expand upon it. Simplify it. If crude is what powers the world's engine, the world's economy, if the global economy is slowing down, what's going to happen to the engine? The engine's going to slow down, right? So if the engine is slowing down, do you really need as much crude? Do you need to be pumping in as much fuel into the engine? Short answer, no. So crude has no place to go but down. Now, you could say, well, but crude's the inflation hedge 100%. But here's the kicker. Here's the sweetener of crude going down. There's supply coming from OPEC plus. If OPEC wants to hurt the US, really wants to hurt the US, now's the time to do it. Why? All they have to do is just open up the spigots and blast the market with crude, and they will cream the shale players. You could see oil sub 50 very quickly. Very quickly. Now, do they want to do it? No, because politically, what's the advantage of doing it? But can crude have a 5 in front of it? Yeah. Could it do it by within the next week and a half? 100%. Right now, it's trading in a band of 72, 71 half, 72 to about 66. 50 is nothing. $9 in a week, no big deal. No big deal. So yeah, when you're looking at putting pieces together and trying to understand how the fundamental picture plays in part with what's happening, you can't just be super micro focused, whether it be I trade ES, I trade NQ, I trade Rivian, I trade Tesla, I trade Apple. You really need to specifically now broaden out your horizon. Now I'm going to tell you effective tomorrow, because I already spoke to a few friends already. The guys that I know that are in the prop world, in the T3s of the world, they are all ETF focused now. They're not going to be in any names, just straight ETFs. That's where they're going to be. Why? Because that's where the action's going to be. Volatility as a trader is your best friend. Volatility as a investor is your worst nightmare. Literally, this is for investors, this is literally your worst nightmare right now, unfolding in front of your face. Now, honestly, looking at where the implied open is right now, we're not even at the 10% mark yet. Who knows what 10% on the S&P is? What's the number? For those of you trading S&Ps, whether it be stocks or ES, what is 10% off of highs? Off the cash market, because you should know this information. This is important information. Who wants to take a guess? Oh, come on, guys. You all traded this shit. You should know what 10% what 10% is.
I could tell you, Dan, but I'm driving.
And you have computers in front of your faces so you can cheat too. It's about 54.50. The question was, where's 10% off highs in the S&P cash? It's about 54.50. Can I ask you a question? I'm not attacking anybody. If you're trading these indices or you're trading stocks, don't you think that's something you should know? All kidding aside, we've been bouncing off of that area and we've been kind of hanging out there. But don't you think that's important information to know? And I'm not judging any of you. I'm trying to help you. I'm trying to show you where your edge is in terms of information. Because the honest truth is, the higher timeframes that you go, the playing field, by the way, is very level. There is no difference between you and an institutional client, an institutional trader. Zero. Because you all have access to the same information. The only difference might be that they have the information a little bit quicker because of the fact that they're paying for, or their companies are paying for certain information subscriptions that you just can't afford. And not because of your financial situation, just because it's not the affordability of it based off of no one's here is paying $20,000 a month in news subscriptions for a Bloomberg terminal. Let's be honest, unless you're a company, so that's the only difference. Or they're paying for a Reuters for a Thomson Reuters station, so they have access to the data a little bit quicker, but not quicker where they're 3 weeks ahead of you, quicker by like a couple of minutes. And the truth of the matter is, they're not even parsing the data. They have computers that are doing that. Correct. I agree with that, Jam. So the reality is, you now are in a situation where how many of you, let me back up a second. How many of you traded through COVID? Realistically traded through COVID? We got 25 people here. Anyone trade through? Only 2 people have answered so far. 3 people. Come on, guys. Don't be shy. There's no shame in it. It's all good. Okay, so if you haven't traded through COVID, that means you didn't trade through the VIX blow up. That means you haven't traded through a lot of different things that have happened. Okay, meaning in the past 15 years, can anyone say what were the most highest volatility moments? Anyone want to take a guess? That's fine. Anyone want to take a guess? If you don't know it, I'm going to give you 5 seconds. If you don't know it, I'm going to rattle them off very quickly. 5, 4, 3, 2. Well, I'm letting the two people type, and then I'm going to rattle them off. There were a bunch from 2010 till now, the past 15 years. What were the highest volatile? What were the most volatile sessions? Times. 15 years. So he's not wrong. Christian, he missed one. Christian typed it, but he missed one, and he started a little early. So you have in 2011, you had the Greece exploding, the EU debt crisis where Greece fell apart. And by the way, while Greece was falling apart, guess what happened then? The US got a downgrade. The US got a credit downgrade. Oh, and for those of you that weren't paying attention, the US is now was put on this morning on credit watch, by the way. So you had Greece, you had the US US had a downgrade. Then you had a few years later, you had China. It was a China explosion. Then you had the VIX implosion. Then you had COVID. Oh, then you had the before COVID, you had in 2018 in Q3 and Q4, you had when Trump was around in Trump 1.0, you had a complete implosion where the market collapsed because they thought that Powell was gonna cut rates and he didn't. So yeah, Christmas Eve, exactly. And then but that whole quarter. Then you had COVID. You've had all of these kind of events. The market right now is trading as if this is a black swan event, yet it's very much in the market. It's very much in the market. Now, if the market bounces tomorrow, don't all at me and say, "Oh, you're a schmuck. You don't know what you're talking about. Look, we bounce." Listen, I can only go by what I know and what I see and what's going on. Nobody can predict the future. And to be honest with you, you're all very, very fine people. But if I had a crystal ball and I could tell you exactly what's happening tomorrow, I wouldn't be here with you right now. I would be on my island right now. That's where I would be. I would be on my island. So obviously nobody knows what's going to happen, but you have to start parsing what's going on and understanding where things could be. If we're in a high tariff environment, what is going to happen to certain things? So you have to ask yourself a very simple question. If we're doing all these tariffs, we're slapping everything on, we're still waiting to hear from South Korea, Japan, and China. Somehow or another, Trump miraculously got all three of these guys to come together to find a way that they're going to retaliate. What could they do? Who knows? What could China do to really, really put the kibosh and put the squeeze on US companies? All you have to do is give me tickers. Give me 2 to 3 tickers. And it should be, and if you're trading this stuff, you should know it literally off the back of your mind. It should come right off.
At least Apple.
There's one good. That's Apple. Perfect. Amazon, not so much. It's a good guess though. But Apple, it's Apple. Another one. It's a big one. There you go. NVIDIA. So you got to do Apple, NVIDIA. That will make life very, very difficult. Very, very difficult. Because if China goes after Apple, everybody's been hiding in Apple. We're going to go into the charts in a minute. Everybody's been hiding there. If that market gets shut down for Apple products, now what? Now what? So do you still hide in Apple? Probably not. So if Apple, NVIDIA, and Microsoft are the top 3 weights in the S&P, Microsoft is not so much, but what's going to happen? What's going to happen to the market if Apple and NVIDIA both go at the same time? NVIDIA is going to be down a boatload tomorrow. What's going to happen to the market? Logically, what's going to happen to the market? And don't sit here and quote me levels. I don't care about levels. I want to know in your mind, logically speaking, you're trading this shit every day. What's going to happen? If Apple goes and they start going after these massive companies, what's going to go? Limit down is 100% possible. It's 7%. We're already the Russell's almost down 5, and tech is down almost 4.5, and the S&P not so much, but the Russell's down almost 5 already. Why is the Russell getting pounded? The Russell's down 4.75% right now, Russell futures. Why is the Russell getting hit more than the others? Nope. Good try. Good. Keep going with that one. Keep going with that one. what by definition, what are the small cap companies? Where are they? Where is their focus? 100%, where is their focus? They're not going to grow, but where are they focused? Nope. There you go. They are 100% domestic. They're domestic. The Russell is a barometer for the most part on risk. When you see the Russell ripping, it's a risk on day. When you see the Russell getting creamed like it is right now, down 5%, by the way, for the Russell, this is a huge move. I mean, everything's getting hurt, but everything's getting hit. But my point is, it's a risk off day. So they're already pricing in right now that the U.S. domestic growth is basically in the toilet. Now, you could turn around and make the argument, well, they're doing this because they want to then go and what's it called? Restart everything. But again, like I just told you a few minutes ago, this is a country. This is like an aircraft carrier. It's not a battleship. This does not turn on a dime. So once this ball is in motion, it's going to be very, very hard to kind of maneuver things. Okay. So far, so good. Am I boring you yet? You can tell me if I am. I'm all right. I'm all right with it. While you're letting me know if I'm boring you or not, just you should know I'm looking at the straddle for tomorrow. The implied move for the S&P right now is 122 and 122 handles. That's the expected move for tomorrow. 122 handles. Just out of curiosity, I'm just curious. I'm just gonna ask you a stupid question. If the expected move for tomorrow is 122 handles, which basically means we're going to be moving up and down 30, 40, 50 handles an hour. I'm just curious. What would you consider a successful day trading that? Ooh, a little sweetener of a question. What would be considered in your mind a successful day? Something is moving around 122 points. So what is that? What is that tick wise? I don't know what that is tick wise. I don't trade the S&P, but
Flat.
flat. See, 122 is 122 times 4. So that's 488 ticks, approximately. I'm just curious, if something's moving around 122 handles, how much of your gains would you consider to be a successful day trading this? Give me all in. Don't give me scalps. For the day, how much did you make? 40 points would be solid. You think 40 points would be solid on 122 handles? You know what? 50%. Okay. You know what? Let me make it easy for you. I'll make it a little bit easier because sometimes S&Ps are a little bit harder. Let's do NASDAQ. Okay. I don't really like NASDAQ, but we'll do NASDAQ. Let's just look at NASDAQ a second. The expected move in the NASDAQ. Whoops. It's a little bit less. It's about 380 handles tomorrow, roughly. Let's just stick with S&Ps. It's easier. So S&Ps 100. Well, now it's even changed. Now it's 124. So 124 handles. How much do you want to get out of this? Yeah, handles equals points. Yeah. Yes. 4 ticks is a handle. Sorry, I'm old school. You guys are trading this stuff. You should know what you would consider a successful day. Don't be shy. No one's going to judge you. 60 ticks or 60 handles? Yeah, I will in a second. I'm going to show them. That's awesome. If you got 60 handles tomorrow, that would be amazing. On how many tries? If you did it on 60 tries, that's the difference. Then you got issues. Let me ask you a question. You're preparing for tonight. You're preparing tomorrow morning. You're getting ready. Okay. Who can visualize what's going to happen at the open tomorrow morning? Let's do an exercise. Visualize the open tomorrow. Okay. We're not going to focus on commodities right now. We're going to just talk about stocks and indices. Let's visualize it. What's going to happen tomorrow morning? Let's think in our minds what's going to happen. Don't type it. Who wants to speak first? Who wants to give me a visualization of what's going to happen tomorrow morning? And don't say that we're going to rip. I don't want to hear that. Give me a visual. After I do the visual, I'm going to show you where I get this information, but I want to get a visual. 9:30, the bell rings. What happens?
So I trade stocks, but I think 9:30 it opened, ton of wicks for at least the first 5 to 10 minutes.
Okay, keep going. Keep going with that. That's good information. Keep going with that.
So then I'm gonna try to locate the sellers, but they're probably gonna be all over the place. All my current levels are blown through, so I'm gonna have to go to levels back probably to last summer, maybe. I don't
But you
know.
have this written down already beforehand, right?
Yeah, that's what I work on tonight to see look at levels from the early of last year because we're already at 2 contract rollovers from last summer.
Okay. And that's
And
good stuff.
stocks, by the way.
That's good. That's amazing stuff. Anybody else want to try take a shot at this? That was what he just did was amazing. What Truth just did was amazing. By the way, are there 2 truths over here, or is it you just twice?
That's me twice. I got my computer so I can type and my phone so I can hear.
It's fine. It's all good.
It's a bit of a mess. So excuse me, y'all.
So let me give you a visual because Truth was the only one brave enough to do it. So kudos for him. Maybe on the next question, someone will be brave like him. I'll tell you how I visualize it. I look at it like this. I say to myself tomorrow morning, everybody's looking at this right now. Anyone who's long stocks, right? Which, by the way, most people probably weren't, but the way we closed, it may have trapped a few equity traders with some leftover stuff. First thing that's going to go through their mind tonight is, what's the best situation I could possibly hope for tomorrow? Obviously, it's going to be a gap down, right? So let's not talk about that. We know it's a gap down, right? So we say to ourselves, okay, do we get a gap down and they buy it up instantaneously, kind of like what they did this morning? Like, what do they do with it? So they start to think to themselves, okay, the first thing that's going to happen in the morning, the first thing is everybody who's a weak hand is going to puke their shit instantaneously. Spreads are going to be all over the map. So if you're an equity trader and you're trading high beta tech, do yourself a favor, stay out of it tomorrow morning. Give things a chance to open, and not 5 minutes. Give things a chance to open. The spreads are going to be all over the place. Okay. If you're looking at NQ, do yourself a favor, take tomorrow off. Okay. No matter how good you think you are, which I'm sure a lot of you think that you're amazing, do yourself a favor. Walk away because you're not as good as you think you are. Not in volatility like this. You're not going to be able to do it. We're going to be ripping up and down tomorrow in NQ, and not because of any other reason, just because it's trying to keep up with stocks. Probably 50 to 75 handles in 10 minutes, every 10 minutes, up and down. S&Ps probably go 30, 40 handles up and down in 30-minute increments, 30 to 60-minute increments. So tomorrow morning, the first thing is going to be is everybody's going to try and get out. Who's stuck? They're all going to try and get out. Okay. So then what? Well, do we have any data tomorrow? Does anyone know, do we have any data tomorrow? Any data on the tap? What do we got? Have lots. So if you're an indice trader, we got import exports at 8:30. We've got S&P global PMIs at 9:45. We have ISM services at 10 o'clock. Every single one of those things could exacerbate this move to the downside. Every single one of them, because the data over the past couple of days has been in the toilet, literally in the toilet. Okay. All right. I think I've done enough blabbering on this. Let's get to some technicals, and then we'll try and piece all this together and see what what we got going on. Yeah, there's a ton of stuff coming tomorrow. And then, by the way, we have the big rock show on Friday, which we have NFP. And if you think there's not going to be revisions to the downside, huh, you bet your ass there's going to be revisions. So we are chock full of data coming out. Okay. All right. So let's first things first. Let me share. So before I share, hold on a second. I'm gonna. Okay. Let me get a share. Okay. I'm gonna share. Here we go. Let me find which one it is. Okay. Okay, for all the who here is a toss person? Toss is really good with this kind of stuff. Anybody here do toss? Who does toss? I'll show you how to find it on toss. Steve, we're being recorded, right? All right, maybe edit this part out. So I have this toss account. I got this toss account, I think 15 years ago. I get the account. I basically put $50 in an account, bought some kind of micro, who knows what, just to say I had a position, and I had this account ever since then. I've never once put any money in it, traded in, other than the $50 that I think I lost already. So there you go. So yeah, Thinkorswim. Yeah, there you go. So in Thinkorswim was originally designed for options. That's how it was originally designed. So you look at Thinkorswim. So you're going to find, how do we find this information? So you go to trade. Everybody see this? Does everybody see this clearly? Okay. You go to trade. You put up the symbol. So in this particular case, it's the S&P. And then you just go to your options. So I go here. I'm going to Friday expiry. And I go right now, 55.13 is where we're trading. So we're closer to 55.10. I scroll over, 122. That's the straddle. I'm looking at the straddle. See that? Straddle. That's what I'm watching. That's telling me what the expected move is for tomorrow. We get to 55.15. It's 127. See that? That's the premium. And it's just going up and down. Okay. This is going to change tomorrow morning. This is just right now what the expectations are. Okay. Everybody clear on this? Pretty simple, right? You all good so far? You know, no one's bored? Because if you are, I'm going to wake you up. No sleeping. All right. Let's look at cash markets, and then we'll get to the futures. So let's go to the cash markets right away. You know what? Let's start here. We'll start at FANG. Get there first. Hold on. Okay. Let's go to S&P cash first. Okay. So obviously we closed all the way up here. Congratulations. Nice. And we're going to basically be opening up about over here. So 55.50 is 10%. So basically we're going to be opening around 10 and a half. Sure. Cash market. The cash market is the SPX. The SPX, the NDX, the CompQ, the NASDAQ 100, the NASDAQ Composite, the Dow Industrials, the Russell 2000, the Wilshire 5000. Those are the cash markets. The SPX is the ticker for the cash market. Cash market is just that, the cash, the stocks. All the stocks are being calculated in this index. The S&P or the ES or the NQ, but the ES is a derivative of the SPX, which means it derives itself from this. This is the SPX cash index. So when you're trading futures, you're trading technically this. And what is this? 500 stocks. That's what this is. So for those of you that don't understand what it means when you're trading stocks, okay, let's just tell you what it is. Right now, the S&P is trading 55, is around 55.10. 55.10 times 50. Every time you buy an ES contract, that's the equivalent of how much stock technically you own. $275,500. So your one little ES contract is controlling that amount of stock. That's called notional value. Did I lose anybody? You're still with me? Anyone who knows me knows me already. I don't like the crickets. I like people to be involved. So wake up and be involved. Don't be shy. I'm not shy. I'm already comfortable with all of you, so you should be comfortable with me.
I'm with you.
Okay, good. Okay, good. Okay.
Hey Dan, sorry, it's
Welcome.
Dennis. It's Dennis here. I don't have access to the room, so if I may, I just want to add like one thing, and that is that, you know, there's so much crazy shit going on like today, and you know, um, I notice it with myself that it's like affecting me, like it's like really sucking you in, you know. And I think it's also really important to like sit down, calm down, and say something to yourself in the realm of, this is just another day in the market. It's a crazy one, but it's just another day, and I need to stay calm. I just need to execute what I know, what I do best tomorrow, and not get sucked in by all this shit, not like spend hours on fucking X all night long and read stuff and, you know, get worried about my portfolio, things like that. Just stay calm, execute, the size accordingly, don't do any stupid shit, just keep on chugging along, you know.
He's 100% right. Let me tell you something. Okay. And this is something you should always carry forward. You cannot control what's happening now. Not only that, you can't control what's going to happen tomorrow. You only control two things: where you get in, where you get out. Everything else that happens in between, you can't control it. So to sit and stress about it is kind of pointless and meaningless. You know, how many of you sit there all day long staring at charts and tick watching? How many of you do it? Rooting it on. Go, 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 go. How many of you do it? Come on. Don't be shy. How many of you do it? Only two people were brave enough to say something. Three. Don't be shy. Come on, don't be shy. Can I ask you a question?
You mean rooting for your prize?
No,
Like,
no, you get into a position and it goes, and you're just waiting, you're just sitting there rooting it on.
yeah, I mean, it happens, it still happens, but it's just, you know, it's just a feeling. You know.
Okay, but you're sitting there rooting it on, right?
Yeah.
Can I ask you a question? Since you're brave enough to talk, I'm gonna ask you a question. Can I ask you a question? Do you think let's just what do you trade
Um,
primarily?
high beta mostly, some
Okay,
small cap.
no problem. So let me ask you, you buy Apple, right? Do you think that thing cares about you sitting there going go, 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 go?
Absolutely not.
Okay, do you think it's gonna move because you're saying go, 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 go?
Never.
So you know what you're getting at if you're wrong, right?
Yeah, 100%. But you know, there's like, I think there is, for me, there's always a distinction between what, you know, my brain is like firing out, but that's not me. That's not what that's not the trader me, right?
Right.
That's like a more rudimentary part of me. And I acknowledge that I say these things in my head maybe, but I don't act on them. I just know they're there. That's it, right?
Okay, that's fair. That's fair enough.
It's hard to fight it, right? I mean, eventually it'll get less and less and less, of course, and it doesn't come up very often. But when it's there and it happens to the best and to everybody, then you just acknowledge it. No need to fight it really. Just know it's there, you know, and just keep executing what you need to do.
You're right. But sitting there and cheering it on is not really going to do anything, right? So really, I think the reason why people do it, honestly, is they have no confidence in what they're doing. Because honestly, if you had confidence in what you're doing and you've accepted the risk because you're confident in what you do, you get in, you put your stop in. Sitting there watching it, it's not gonna do anything. It's not gonna do anything for you. That's the truth.
Yeah. That's a very good point, because maybe you could take it as a sign that maybe that trade that you just took is not really one that you should have taken, and then, you know, get out. if you're like getting emotional about something.
Exactly. You know what I do? Just so you know, for all of you, know what I do and what my guys do? We do this all the time. We put our stuff on, we trade either price or time, and we walk away. Because what's the point of sitting there watching it for? Let me ask you a question. What is that a way to, how is that a way to live your life? You know what? Let me show you something. I'm gonna switch this screen for a second. Hold on. Let me, there we go. Hold on. I wanna switch this. Hold on. I wanna show you something. Hold on. I'm doing this on purpose. I wanna show you something. Okay. You all see this watch list over here that's clicking away in real time? You all see this? Can you all see it clearly? Okay. Just so you should know, this is Excel. For those of you that don't know, this is all Excel. This is live data coming into Excel. Okay. We're gonna get to that in a second. Okay. So let's just, everybody's looking over here and we're all watching the indices, right? We're all watching, right? Everybody's watching this. Okay, we're all watching, everybody's watching this, right? Everybody's looking at this right now. Okay, it's it's printing away. Okay. The diamonds and are red and green are upticks and downticks, and it's highlighting upticks and downticks. It's all clicking away. You'll see it, right? Yes, no, you can see it clearly. Okay. Let me ask you a question. If you're in a position and you're sitting here staring at this, because that's essentially what you're doing when you're looking at a chart, a time in sales, a dome, which we'll get to the dome in a second. That's essentially what you're looking at. I'm just curious, are you able to think rational when you're sitting and staring at this? Or looking at a chart, or looking at a dome? And by the way, how many of you trade the dome? What's the dome? True. What's the dome? For those of you that trade the dome, what's the dome? I don't have one up, so I can't show you. Okay, good. Perfect. Looking and sitting and staring and watching is not going to help you. Yeah, it's not going to help you. It's just, if there's no, you gain nothing from it. Hold on, let's go. So don't sit and do it because it's not going to help you. Okay. So far, so good. We're all good now so far. Okay. So based off of the implied move, right now, we're probably going to open up somewhere around over here. Somewhere in this area tomorrow in the cash market. Somewhere around here. Okay. Ultimately, now there's a shift. Originally, I thought maybe we'd get down to 54.50 and hang out in this 54.50 to 58.50 area. We've now there's been a change. I believe now this low over here of 5400 is definitely in jeopardy, and there's a very good chance that the August lows are coming in play. Are we going to break 5,000? I think that's wishful thinking. I just think it's wishful thinking, because another 500 points, basically just do the math. If up here is 6129, let's just say 6100, and we're basically about 600 handles below, which is 10%. Another 600 handles puts us at 49. That will put us at 20%. I don't think we're going to get to 20%. I think we're going to get to, maybe we get to 15, and then it's pretty much the Fed jumps in. I don't think they're going to let this go to 20%. I really don't. I really, really don't. And I'm not just saying because I'm talking my book. I'm saying I really don't believe they're going to let that happen, because if we start going down to if we go to 20% on the S&P, then a lot of things have gone horribly wrong, and they'll see it already before that, and they'll start adjusting to it. Okay. I could tell you right now, there's a very distinct possibility we could get an emergency Fed announcement within any day now, imminently, that they're having or a Fed emergency meeting, which will light a fire under the market. So Notorious just actually brought up something very interesting. He said 3 bear markets. What's a bear market? Give me a definition. What's a bear market? You said it, so you're in the hot seat now. 20%. Okay, good. Great. Nobody type. I want everybody to think about this question. Okay. If you bought, let's say Apple, and you're up, I don't know, let's just say you're up in the stock 250%. The market comes in 20% in a bear market, right? So you're, let's say you're, instead of being up 250%, you're only up, let's say 225%, let's just say, because a little more juice in it. Are you worried? All kidding aside, are you worried? Would you consider yourself in a bear market? Serious question.
Sure.
Well,
Just ask.
no, Sonny. The question is if you own something and you're up 225%, 250%, the market pulls back 25. You're only up 225%. Are you nervous about that position?
Well,
Absolutely not.
not really, but the math is a little wrong. So
Yeah, I'm just using an example. I'm just trying to use it. I
yeah,
get it. No, I
the
get it.
math was not correct, but yeah, I mean, I'm in exactly this boat. We own Apple from 2010, so you know, but people still, I think, would be worried because you're measuring against highs usually as an investor, which is like 250, right? So you're
Let's
like,
say 250. Yeah, but would you really be nervous if your
I mean,
horizon is years and
no,
decades?
then yeah, absolutely not. You're just like holding through and don't worry really.
Okay, so let me ask you a different question. Let's go a different route. Okay, get you into the mind of how people how institutions think. If you ever own a stock in your life, okay, and if you've done a little bit of research on it, you go to Yahoo, you go wherever, you always look at who the institutional holders are. It's always the same 5 to 6 people, always the top 10, right? It's your Fidelities, your Vanguards, your T. Rowe Price, your BlackRocks, right? These names are not foreign to you, right? Always the same couple of names, right? These guys buy forever, unless they're in something like an Intel where a dividend gets cut and it's a complete disaster. That's the only way they get out. Otherwise, they're in it forever, literally forever. Okay. Do you think when markets are pulling back that they all of a sudden start just dumping positions, dumping their holdings? What do? Another question while you're thinking about that question. Okay. The market makers, the evils, their job is to provide liquidity. Market goes up, they got to be the ones selling it. Market goes down, like tomorrow, they got to be the ones buying it. Right? If the market's going down and they're the ones having to buy because they have to add the liquidity, they're probably getting creamed, right? Which would make sense because they're going against the grain. How do they protect themselves? What do? Buy more. Then you end up like Kathy Woods. That strategy is working out pretty good for her, isn't it? You know that she's lost more money. She's lost more money in the past 10 years than I think any money manager ever. Seriously, she's on a list. There's a real list. She's destroyed more investor capital than any fund manager ever. Something like that. What do? How do they hedge? They buy puts, right? They're doing things to kind of keep things going and protecting themselves, right? Because obviously, you can have infinite money, but infinite money eventually doesn't become infinite when everything is just going against you. And when you're dealing with leveraged products, you have no choice. And by the way, let's go a different way for a second. What's going to for those of you that are trading indices, we're going to stick with indices. What's going to exacerbate these moves tomorrow? Up or down? And don't say the stocks because it's not the stocks. What is going to exacerbate these moves tomorrow?
Options.
Nope.
No.
Good guess though. Not news. It's a product. Market makers are machines. They can keep up with it. They can keep up more than anybody. It's not a market maker. Market makers are all computers. Nope. You guys are trading indices. You guys should know this, not the traders. Good guess though. It's 3 letters. Tell me when you're ready for the answer. Because this is what's going to be wrecking havoc tomorrow. 5, 4, 3, 2, 1. Nope, nope, nope. It's called ETF, Exchange Traded Fund. Whether it be a regular ETF, a double leverage ETF, or a triple leverage ETF, are going to be wreaking havoc on the US stock market tomorrow. And if you think that I'm wrong, no problem. I have a few bridges I'll sell you. They are going to be wreaking havoc tomorrow. Why? Because whether or not, not so much rebalancing, whether or not traders are involved in the individual names, the ETF itself needs to constantly adjust. So if let's say it's the SPY, we'll use the SPY for example. Okay, the SPY is designed. Okay, the State Street SPY is this, or the VOO. They're designed to mimic the S&P cash market. That means that they have to own all those stocks by weight, just like the S&P does. So they're going to have to be buying and selling and adjusting all day long to what the S&P does tomorrow. Qs, same thing with the NDX. And the double and triple leverage ETFs that are based, or the SQQ or the TQQ, whatever, those are all based on the same concept. So the ETFs themselves tomorrow are going to be a shit show. You might be able to make money in them. I don't know. I'll leave that up to you. I'll leave that up to your better judgment. But I'm just telling you what's going to be exacerbating moves tomorrow. Then throw into the mix everybody else who's having to hedge their portfolio with either puts or futures. They're going to be all over the place tomorrow because people are going to be constantly adjusting. And by the way, I use the word people, but it's not people. You know who it is? It's called a computer. The computer is going to be doing this all day. It's going to be doing it all night long, all day long. And by the way, the fun is only just starting because Japan's cash market is about to open. The Nikkei is about to open in about 20 seconds. And at 9:30, China is going to open. And then, like I told you, at 3 o'clock in the morning, this is all Eastern time. Okay. Europe's going to open. The fun and the fireworks are only just starting because everything is going to be just a bloody nightmare tonight. Now you're going to turn around and say, "Oh, if we come in tomorrow, we're up." Okay, I can only go by what I see. I can't go by what's it called. And by the way, just you should know, the grain markets just opened. The grain markets just opened and they're getting crushed. Let's see. Soybeans, something you should know about. Why? Because soybeans is trade. China buys more soybeans from the US than any other country. Now we have tariffs. It's going to affect the farmers. Soybeans open down about 1.75%. Soybean oil is down about 3%. Wheat's down about 2.25%. Corn is down about 1.5%. Now, why is this important for? Very simple. Trade. If countries don't want to buy from the US, think recession. What's going to happen? During the first Trump 1.0, okay, what industry got creamed more than any other? One specific industry got killed more than any other. It was agriculture, the farmers. The farmers got annihilated on the China trade war. That's going to be the fear now. While all this is going on, people are going to be thinking to themselves, you know what? If this is all happening, you know what's going to happen to the world's engine? That means the world's engine is going to slow down. You know what? Crude prices are going to go down. Is it good for the people when they come to pay at the pump? 100%. But if the country's in recession and they don't have any money, it could be $1. But if they can't afford it, that doesn't make a difference. And just so you should know, even though these things are going to go down, you know what happens in a trade war? Prices go up. So even though certain basic necessities will potentially go down, for the most part, prices are going to go up. So I forgot who said it earlier. Someone said, I saw the other one in the other room, was talking about TVs. Okay. If you bought a TV and it cost you $1,500, tomorrow it could cost you $5,000 for that same TV. Same TV. I've been following very heavily the auto sector recently. because this is really, they were coming after them. Do you know that there was a mad dash the past 4 or 5 days? Dealer inventories have been wiped because people have been running to buy, that needed to get cars, went to go get cars. And don't think, oh, that was Dennis, thank you. And don't think for 1 second that the used car market's not going to get affected by this, because prices are only going to go up. Why? Because if you can't get new car inventory, where are you going next? You're going to used car market. So this is having wide-ranging effects. So again, don't be in a box of, well, I'm trading the S&P and I'm trading the ES and I have a level and I'm trading a level 5,500 and oh yeah, 5,500 is my level. I'm just going to trade that. Dude, what does that mean? What does that mean? If money wants to move someplace, it's going to move, and it's not going to care about your level, your line, your moving average, or your star constellation that you're looking at. If somebody needs to move something, which they will be doing, they're going to move it regardless. Nothing is going to exist. Moving averages, lines, nothing. It doesn't exist. Fibonacci, all of this other shit that people throw on their charts, it's not going to exist. I'm telling you right now, they're going to blow right through it. So what do? Well, you have two options. One, when in doubt, completely stay out. And don't sit and watch it, because really, what are you cheering on? To be honest with you, if you're a what's it called, this is, it might be good for a trader. You look at this, but the reality is, I deal in reality. I don't deal in esoteric. To me, when I look at this tells me pain, not trader pain. This is country pain. There's a lot of pain coming. People are going to get seriously hurt. Now, I live primarily in the intraday world, in the commodity space. So the things that I do have real world ramifications, because what I do to a certain extent affects prices that people pay realistically. So, even though I'm cognizant of it, I still have a job to do, so I don't have a choice. But the point I'm trying to make is there are real world ramifications if things start happening. If with corporate balance sheets levered up the way that they are, if company stocks start to fall out of bed, really start to fall out of bed, and companies really have a problem, they need to raise money, you know what could happen? If sales start plummeting, starts with an L. It's called layoffs. Recession. If we go into a recession, then it's just a vicious cycle. Then sales will plummet even more. Okay, right now the Russell is pegged down 5%. It's not budging. It's literally pegged. I'm watching it the entire time because I'm focusing on that more than anything else. It's pegged there. Okay. Understanding the environment with which you're in is very, very important. So, what does that mean? What practical advice can I give you? Because I always like to do something where you can actually carry forward something. Otherwise, listening to me talk is nice, but my voice is not that sexy. What do? I find that the most powerful trades are when you're able to match a fundamental picture with your technical backdrop. When you could mesh those and marry them together, they're usually home runs. So for example, let's just use, if you had a fundamental picture in your mind that the tariffs were coming and you got short, let's just say hypothetically you got short, you're getting paid tonight. This is a home run. Okay. Now, could anyone see this going? No. Would any risk manager allow you to take this trade tonight? Honestly, no. In all reality, you would not. Sorry, I was taking a drink. No risk manager on the planet would have allowed you to be would have allowed you to be in any market tonight. No, they wouldn't have allowed, because it's basically a black swan and you can't control it. So there was no way it was going to happen. Even if you're on the right side, anywhere hedge, they wouldn't let you do it. I'm just telling you just a fact. Okay. Longer term players, they have no, what's it called? But guys who are shorter term in nature, they wouldn't allow it. It's like if there's a hurricane coming over a weekend, you're pretty much not allowed to carry natural gas because it's a binary event. You could get killed if you're wrong. So they don't allow it. Okay. So just keep that in mind. So to think in the back of your mind that, oh, there are guys that I'm telling you right now, that's not the case. It's always risk first. It's cover your ass first. Firms are not in the business of blowing up. They're not interested. You know what happens to traders that don't make it or that are just constantly losing? They lose their jobs. It's just that simple. They lose their jobs. So there's no one out to get anyone like this. Everybody's just trying to keep their job. It's really, I know it sounds as boring as that, but that's really what it is. People are just trying to keep their jobs. So Right now, you have a situation of what can happen. So we already laid out, we know already that we have tariffs coming. We know already that Japan and Europe and Asia and Europe are going to probably take this thing a little bit lower tonight. We got to 54.81. That low in the S&P may not hold. That may get taken out when Europe opens. I'm not saying it's for sure. It may. I don't know. Okay. But knowing that that's all going on, yeah, well, they had a different story, but they were all options, and they really that Black Scholes thing was really a mess. It was a little bit before my time though, like a little before, not that much for, not that much. I was around, but I wasn't working yet. I was still in college when that happened. But my point is that when you're looking out and you're trying to figure out where things could go, now you have to ask yourself, could there be bounces? Yes. Are they going to be vicious? 100%. So don't put in the chat afterwards, wow, look at this, look at that. Let's get it out of the way right now. Every bounce in quote unquote a bear market or a market like this, every bounce is vicious and violent, every single one of them. So don't be shocked by them and don't go, whoa, it's so cool that every bounce, that's the way it works. Every bounce is vicious and violent. End of discussion. Okay. Your job is not to sit there and cheer it on. Your job is to figure out a way to potentially put on risk. And if you don't know what you're doing, stay out. And if you feel you have to do something, then do it with a one lot micro and hope to God that you don't get your clock cleaned. But my advice to you is if you don't know what you're doing, stay out. You do not win points. It's not, I see it all the time. I have this, and you can ask Steve, he's here, he'll vouch for this. I see it all the time. It baffles my mind. The amount of people that sit there, it's like a badge of honor when they get the shit kicked out of them. It's the weirdest thing to me. Oh yeah, you see it all the time. Oh yeah, this happened, that happened. Oh yeah, I got killed. I got that. It's like a badge of honor. Why would you want to put yourself through that? And you know what? He's here. I'm going to let him say it because he sees it more than I do.
We don't work. We use them strategically.
Dan, can you hear me?
Yep.
Absolutely. It absolutely drives me crazy. People do post their losses, and I understand why they're doing it to get it off their chest and everything, but it is almost like a badge of honor because then everyone else jumps in and don't worry about it, stick with it. It's almost like, it's just creating such a negative environment. It's one of the reasons why this year I've been trying to feature and focus on our winning traders. So the members start looking at who's successful and what they're doing different than everyone else who's either trading scared, afraid, or losing. So we're trying to change the mindset within the room for the reasons you just mentioned, Dan.
I mean, really, just like
I hear that what Sully. I hear what you're saying, Sully. If they worked for me, I would fire them.
for ripping us off.
If they were my traders, I'd fire them. Simple.
Really, I'm asking
Not interested. I'm not interested in the losers. I'd just fire them. I wouldn't even ask. I'd just say you're done. Pack up your shit and go home.
Never.
And just like that, by the way. This is a harsh business. This is not a business for the meek. This is not a business for those that want to come in and gamble. You want to come and gamble, you're gonna get run over. It's just gonna happen. You think that you're not going to because you think you're invincible. Let me tell you something. You're gonna get run over. And you're not gonna, and I can tell you right now, because I've seen it firsthand. I've seen people lose, not in a day, but I've seen people lose over a month, over a couple of months, tens of millions of dollars, family fortunes gone. I've seen people lose. Now I don't know, adjusted for inflation, what it is. I'm not gonna even begin to sit here and try to figure that out. But I've seen people down $5, $6, $7, $8, $1 million in a day. I've seen people down $500,000 in an hour. I've seen it.
Hey Dan.
Yeah.
Hey Dan, let me jump in, Dan, and just for a quick second, because I'm going to give them real trading room experience the 5+ years that we've been open. First off, guys and gals, one of the reasons why we brought Dan along, and Dan has graciously agreed to help educate based on his Goldman Sachs and institutional experience, is the fact that he does say it like it is. All right. One of the things we've found over the years is we just lose members that just bleed themselves to death. They just bleed themselves to death. They're afraid to trade when They just take random trades whenever they're in profit, 1 or 2 ticks. They sell, they get out, they're happy, they're green. And what they do that for a week, maybe 2 weeks, maybe even a month, but eventually they'll take a loss and then that loss will just blow them up because they have no discipline, because they had no practice ever holding through a trade, and they blow up. And it's a common theme over the past 5 years. So one of the things that Dan just mentioned about, get over it, uh, is we're trying to develop the winning mindset of what it takes to be a professional trader. And one of the things that I've, agreed with Dan, or I should say I'm bribing Dan, is the fact that I appreciate everything that Dan's doing for the room, as does, JJ Ray and the other educators. And for that, we did, at my suggestion, I believe, and Dan, I could be wrong, said, Dan, why don't you create a private course, right? Like a private course for those members only who are truly serious and can handle the type of coaching and teaching that you do. And I think you guys know, and I'll post a link to it in the chat. And for that, Dan, do you mind just hanging around this trading room and giving us sessions like he's given tonight? And he graciously agreed. So Dan's his mindset is a lot where my mindset's at as far as developing good traders. And it is tough love, right? I am personally tired of seeing members leave after 2.3 months. It's been going on 5.5 years. 5.5 years. We want to develop strong traders that may learn the basics from JJ, may learn the basics of trading for 1 tick, 2 ticks, but then, okay, moving on to really becoming full-rounded traders that can handle an environment like we're in. And with that, Dan, I'll shut up. I'm taking your time away, and I'll let you take it from there. And Dan, I'll post the information in chat to them.
Yeah, we'll touch upon what it is in a minute. We'll get to what it is actually before you post it, because it's a little confusing, but we'll get to it in a second. The bottom line is, when you're coming into tomorrow, you need to be thinking,
I said something about cash.
if I worked for a company, what is my expectation for tomorrow? I know already the news, so all the news is out, meaning I know tariffs, I know this, I know that, I know over that. So what happens tomorrow? Well, you're probably going to have retaliations coming left, right, and center, right? Makes sense, right? That makes sense to everybody? We're probably gonna have retaliations between the next, 1, 2, 3, 4, 5 days. We're gonna have retaliatory tariffs from somebody else, right? We see that coming?
Stand, or does oligarchy and a king make the difference?
Okay, good. So we see all that coming, right? Okay, makes sense. The question becomes, okay, from a pricing perspective, I'll tell you something you're probably not gonna want to hear, but from a pricing perspective, we'll get through it. It's gonna suck. We're gonna get through it. Honestly, we'll get through it. Could it last 6 months, a year? It could. It definitely could. If you listen to what they're saying, whether it be Trump or Bassett, their forecast is 9 to 12 months of pain. That's what their assumption is. Okay. So we're in for a rocky road. However, really, the stock market is its own hedge, because the stock market will start already within the next day, or within, I don't want to say the next day or so, within the next few days, we'll already start pricing in and start looking ahead already. We'll start saying, you know what? Enough's enough. Now let's see where we're going to be in the next 6 to 9 months. Really, when does that happen? Who wants to take a guess when that's happening? Because it's going to be coming soon. When do you think it's going to happen that the market's going to bottom? Who wants to take a stab at this one? Because it's coming. No, not time of price. Nope, not August. It's a good guess though. Rate cut. That's a good guess. Oh, I was hoping you were going to get this one right. I was counting on you, Truth. You want to redo your answer? You want to delete your answer and redo it? Because you're on the track. You are on it. Think about your answer a minute and then redo it. because you're there. Nope. Good guess though. The question was, when will the market start looking ahead past the tariffs? Truth deleted his answer because he's redoing it, because he's on the right track. I don't want anyone cheating. See, I want to see if Truth gets it this time because he was there. He was right there. A little bit off, but he was right there. Nope. You went backwards. Nope. There you go. There you go. Chris just got it. What's going to end up happening is that on the conference calls, companies are going to be asked about what effects they see on the tariffs on their customer, what they're doing to adjust, where do they see things going. Listen, forward guidance is going to be shit. We all know it now. So it's going to be stocks are going to get punished and they're going to buy them up on earnings, on guidance. If companies can tell you where they think things are going to go, then we may already get our bottom now. Yeah, we're gonna done a couple of things, not so much layoffs, but really, where do they see that there's a way to weather it and how long they think it can go? Trump is, listen, at the end of the day, I've said this a bunch of times in the chats, I'm going to say it again. Okay. Whether you like Joe Biden or you don't like Joe Biden is irrelevant. Joe Biden lost the presidency not because of his foreign policy or border policy or all these, those are contributing factors. You know what cost Joe Biden the presidency? And not his dimension. He lost the economy. When he lost the economy to inflation, his presidency was basically over. Simple, was over. And he never regained it. If Trump loses the economy, especially a businessman who is, quote unquote, the art of the deal, if he loses the economy, his presidency is over. And that is not going to be good. Now, it doesn't make a difference if you like Trump or you don't like Trump. We have an elected official. If we have a second administration that fails on the economy, that's twice in 8 years, that is not going to bode well for anybody. Meaning, it's not going to bode well for the stock market. It's not going to bode well for the commodity markets. It's not going to do well. That means everything will come in. And if you think for a second that everything coming in is good, when you're trading a bull market, a raging bull market, it's very not stimulating for a trader. Why? Because you're just doing the same thing every day. You become very, very what's the word? Hold on. Not haphazard. You become very where you stop caring as much. Okay, I can't get the word out. I forgot the word.
Complacent.
Thank you. Complacent. Thank you, Lisa. Complacency comes in, and you never think that anything could ever go down or anything, whatever. There's just a certain level of complacency that kicks in. Okay, if we go down, which by the way, we're not going to go down forever. Well, eventually it's going to stop, but there's just a certain amount of complacency that's going to kick in. You start to lose a little bit of your skill set. Traders want markets that are kind of moving. If they don't move, there's nothing to do. Okay. So now we know what the economic backdrop is. Okay. NFP is coming. ISM is coming. That's what we have on the coming down the rest of the week. Could that make or break where we go? Are we going back to where we were when we closed today? Honestly, unless something drastic happens, no. We are now 700 NASDAQ points off of the close. We are almost 900 NASDAQ points from the high of the day. 900. Let that sink in a minute. Okay. So we now know what's going on. Okay. So moving forward, what do? You have to pay attention and do a lot of reading, understanding what's going on economically. But more importantly, if you can't listen to every conference call, which, by the way, there's a lot of them, so it makes sense that you can't. Pick the companies that are the leaders. Go to the ETF market. Find the XLE, the XLF, The Qs and the SPY are easy. The top 2 to 3 names, OIH, either listen to the call, read the transcript. But don't have to read the whole thing because it's very boring if you don't really understand what's going on. Listen to or read what the companies are saying. Where do they see things going? Ask questions. That will allow you to start putting together some kind of idea that when you start having a fundamental picture of what's going on in the background and your technicals start to line up with that. So let's say, for example, like today, you had a thesis of fundamental bearishness and you had a technical setup where it kind of went into a what's it called, the downtrending 21 day and into the 200 day. You took that short, you just got paid. Home run. Okay. Are we good so far? Any questions? The more out of the box that you do, the better you're going to be. Because this is not an in the box type of business. Any questions so far? Or are we good? Okay. So I am on an intraday basis, an opening range breakout trader. That's what I do. Nothing more. I use price and time and volatility to determine which direction I'm going, and that's what I do. Intraday. When it comes to longer term stuff, some of it's fundamental based, some of it is technical based. It really all depends on what I'm in and why. So, for example, in stocks, it's usually fundamental based, and technicals will play a part in it. But for the most part, the stuff that I own is the stuff that I own it for a reason. When I look to do more trading things as opposed to investing things, I usually use the same tools I used from T3. So I use, as you can see here, do you see the chart? Am I still sharing the screen with the chart? Make sure I'm still sharing that. Oh, okay, good. All right. I don't use candles. I have it up here for illustration purposes because I know most of you do. If I had a bar chart, so you'd have no idea what the hell you were looking at. So because of that reason, I just left it as candles. I don't look at this. To me, this is meaningless. I don't really care about this, honestly. But over here, I have the red as a 200, the white is a 8-day, the blue is a 21, the green is a 50. These are all EMAs. Because I don't want emotions, plain and simple. I don't want emotionals. I basically trade off of spreadsheets. So because of that reason, I'm not interested. The candlestick charts mean nothing to me. Literally zero. But kind of like I had this discussion with somebody the other day about CNBC. To me, CNBC is like is like an indicator for non-professional, not smart people. That's the way I view it. So I like to know what the idiots are watching. That's why I look at it. Simple. So many people watch that stupid stuff. I need to know what they're watching. So that's why I kind of look at it. Do I have it on all day long? No, I usually, and if I do, I have it muted because I can't listen to that. I can't listen to that nonsense. And they're terrible on news and always late and always this. I have no interest. And it never fails. It never, ever fails. You'll see a situation. I'll use today as an example. Okay. Who saw the rip into the close today? Because this is what CNBC is going to do. Who saw the rip into I'm going to pretend the rip happened and then into lunch and then we'll have lunchtime and then we'll talk about, then the market had this dump. This is what CNBC would do. You know what happens? They're all jumping up and down, cheerleading. Oh, the market's ripping. Oh, it's unbelievable. Look at this, great. Then the makeup's on, the tie, and everything is beautiful, and they're looking all wonderful and great. 15 minutes later, the market, I don't know, took a dump, and it's down, I don't know, 3%. The makeup's all disheveled, the hair is all disheveled, tie is undone, makeup is coming down, mascara is coming down the face. Oh, that wasn't a bad sell. That was a terrible sell-off. Oh, I can't believe this happened. Oh, what are we gonna do with this? It never fails. It never ever fails. Okay, never. So because of that reason, it's kind of meaningless, and they have no value. So for that reason, what am I looking? What do I care? The only thing that could change the outcome of tonight, the one thing is if Trump turns around and finds a way to backtrack on what he did today. If he does that, all bets are off. We're gonna be way higher than we were yesterday. Today when we closed. That's a for sure. Okay. So with that being said, you have to trade the market in front of you, not the market you want. Don't try and push your thesis on the market. Trade what's in front of you. If it's not there, don't trade it. I know it sounds stupid, but it's really that simple. I always ask this question. It's a very simple question. The trading aspect, you do this every day of your life. You're buying and selling. Yet 90 to 95% fail at that. Explain to me how it is. You walk into a store, you buy something. Do you fail at that? No. So why is it when it comes to this, people fail? You're buying and selling. Yet somehow or another, people have no problem just exploding. I'll use an example. I've used this example a couple of times. It bears repeating. There's a couple of new people here. Who here has heard Peter Lynch? Anybody? The great Peter Lynch from Fidelity Investments. Okay. Peter Lynch has this great analogy. It's probably the best analogy I've ever heard. How many of you have done this? You go to buy a TV, you go to buy an air conditioner, you go to buy a house, you go to buy, I don't know, a freaking plate. You read every single review you possibly could find on this stupid product, whether it be a shoe or a TV. You do hours and hours of research. How many people have done this? Come on, you all do this. You read Amazon reviews, Best Buy reviews, whatever it is. You read every single freaking review you possibly can before you make a purchase, right? You'll spend $5 and yet you will sit and read and you'll do 6 months of reviews on a $5 product. But you have no problem taking 10 grand, slapping it into some stock that you heard somebody talking about, oh, the stock is a winner. That you have no problem doing. But yet you'll spend 6 months researching a $5 stupidity, but you'll drop 10 grand on some wackadoodle stock because you heard about it from somebody who heard it from his friend's fish. This is what people do. They treat these things like they're lottery tickets, whether it be a stock, an index. They're not lottery tickets. They're companies. And the index is a reflection of those companies. It behooves you to know what's in the product that you're trading, so you have an idea of what's going on, because when you know what's going on, you all of a sudden start to get an advantage. If you're just clicking away buttons because someone told you this is a level or that's a level, let me know what you're going to do, because I want to be on the other side by taking your money from you. And if you think that I wouldn't do it, we might be friends, but during the day of working, if you're going to do something stupid and I can capitalize on it, you bet your ass I'm going to capitalize on it. There was a saying in Enron, and if those who don't know what Enron is, look it up, but Google it. But there was a saying in Enron. The traders had a saying that if their bonus would be higher, and by stepping on their colleague's neck, they wouldn't just step on it; they would crush it to get more money. After the day was over, they're all buddies, huggy, huggy, kissy, kissy, kissy. But during the day, if they could slit their colleague's throat to get more money, they would do it. That's traders. That's what traders do. Traders, it's a vicious game. It's a vicious, vicious game. It's war. Every day you come to war. And if you're not ready to go to war, you're going to get killed. Someone else will be left standing and you will be taken out. And I know it sounds harsh, and and it's not sexy, and it's not cute, and it's not pretty. This is not that type of business. That's not what this business is about. And if you think it is, your results are a reflection of that thought process. And if you're doing well, but you can't quantify why you're doing well, then you don't really know what you're doing. You're getting lucky, and eventually you're going to get taken out. It's not a matter of if, it's a matter of when. And I've seen it happen a million times. And it will happen over and over and over again because people don't change. Steve, did we cover enough tonight?
Dan, you there?
I'm here.
Yeah, Dan, I have some questions if you don't mind. I was just typing them out.
I don't mind. Go ahead.
You ready for them?
I'm always ready.
All right, good. First thing I want to do, I want to kind of tie it all together. I was listening and very educational. And I like the idea of having macro fundamental thesis lining up with the technicals. I'm also very conscious of who's in the room, who's not in the room, meaning we have a lot of ES traders in the room. We have a few equity traders, some NQ traders. We also, Dan, have many that who are perfectly fine scalping the shorter time frames. And like I said, everyone could trade whichever way they want to trade, and nothing wrong with that. I trade all different styles myself. But we also have those that want to hold longer. We also have those that want to trade beyond ES. So my question, Dan, is number one is what advice in the market that we are in right now that they can take with them, in your opinion? Should they trade one asset class over another? Should they trade different time frames? And then I'll have a few other follow-up questions after that.
Yeah, sure. Give me 1 second. I want to just make one quick thing because this is coming through right now. So you asked me what in terms of just macro, what I look for. So this is coming through actually now. There's a bunch of GOP senators that are breaking from Trump and are siding with Democrats right now. And they're trying to get through some kind of emergency measures to revoke some of these tariffs. So we're going to have a big Washington fight coming up. So these are things that I need to know. Why? Because I trade macro. So because of that reason, if we're going to start having internal government fighting, then I need to know about this because the market doesn't like that. Besides the fact the market doesn't like the tariffs, but I need to know what's going to be. So I'm constantly looking at news and things like that more than I am looking at price. Price to me is price. Whatever
But
it is.
Dan,
What
would
it
you
is.
and Dan, would you say that because of that, right, news and the machine with algorithms that are in place, that it is a real tough game for retail traders to try and compete against the algos at this time?
It's a loser's game because the computer is so fast. They trade in not even in seconds. They trade in micro milliseconds or whatever the lowest time frame is. That's what they trade in. You're going to get picked off. When you're trading in 1 minute charts, you're not really even trading against traders. You're trading against the spread. What is that? That's literally all you're trading against. So you really don't have an edge there because they're not looking. The algo does not make money. Just so let's be clear on this. The algo does not make money in choppy markets. The algo needs trend. That's how the algo makes money. The algo otherwise is just taking bids and hitting offers. I'm sorry, hitting bids and taking offers. That's all it's doing. So you're trading against that. You're not really, what is that? So you're not really trading anything. You're pretending that you're a machine, but the fact is they do it, thousands of times and they're making money just on the spread and you're getting killed in cost. Because every time you push a
And
button, by the way, it's not just commission, it's clearing fees, it's exchange fees, it's reg fees. And by the way, something else called taxes. These guys don't have commissions, and they're trading so much volume that their clearing fees and reg and exchange fees are next to nothing. So it's advantageous because they're liquidity providers. So you're trading against a liquidity provider. What exactly? What's the edge there? There's zero edge there. None.
right, and Dan, the question based on your experience, right? I was at a Palm Beach Hedge Fund Association meeting. I had an opportunity to speak to a quant trader who confirmed everything, like you've been mentioning, everything's being done by computers. And when I mentioned to him about like the movement of inventory and just an algorithm, he made a comment, and I didn't have time to really expand on it with him, that a typical algorithm could realistically have up to 100 different trades as part of it, meaning it could be an arbitrage trade across different markets, and that is very seldom is just one market trading solely one algorithm.
True. They're
Am I
doing
making sense
correlations.
there?
They're doing correlations. Sure.
Yeah.
They're trading
And
correlations.
that's why we see when I assume we see when Apple moves and the SPY moves and the ES move, everything's moving at the same time.
Yeah, but you also have algos, by the way, that it's good you brought this up. That are actually phantom orders. They're not doing anything nefarious, but they're saving spots in line. So basically, they just replace one order with a bunch of other orders.
So
And
so so if I'm an ES trader, and we'll just say ES, it could be equities, it doesn't have to be ES, any trade, it could be anything. And let's take two examples. One I'm holding for several hours, and then let's say another one I'm doing a quick scalp trade. What are the advantages and disadvantages based on this correlation we were just talking about, and phantoms, what you just mentioned? Like,
Well,
how about looking at it? Is there any edge in how we're trading here?
so you could use a correlation that's happening right this second. Okay, so I'll move away for 1 second. So there's a correlation when gold is green, usually treasury futures are green because that means the yields are going down. Okay, that's usually the way it works. Does it happen always? No, but it's most of the time that's usually the way it works. So right now you have a situation where gold is green, treasury futures are green. Okay, you have another thing, and then there's the inverse. If treasury futures are green, then by definition the yield in the cash markets are down, right? Because that's the way treasury works. It's an inverse correlation. So you could have an algo that's buying or selling S&Ps at the same time that it's trading the 10-year. That's linked to the euro. That's linked to the yen. So if let's say for example S&Ps are going down, then they're buying yen, as to hedge off the risk, or buying treasury at the same time, and vice versa, buying gold and then maybe selling oil, whatever, depending on what it is that algo is doing. It all depends. Now you also have algos that are predatory algos, which scour news and they just trade just literally off of news, and all they do is just get these huge spikes because of what's it called, when most of the time when major news hits, everybody pulls their orders, but you have predatory algos that push things all over the place. Are they predatory? I mean, it's a word, but I'm saying is, the computer, it depends on the strategy. The computer is not really, it's not like the computer does what it's told to do. It's not like it's sitting there and just has an AI and has its own mind of its own. It's told to do what it's supposed to do, and that's why it does what it does. Like case in point, Knight Capital. Steve, remember when Knight went under about 10 years ago?
Right, right.
So that was an algo that went haywire. That's why they got killed. They couldn't. They turned it off. They couldn't turn it off until it was too late. So you can have situations where the algo can wreak havoc also. So it's not like the algo is bad or the computer is bad. It's just it's doing what it's programmed to do. Different strategies, whatever. Usually the Canadian dollar and crude are correlated. So usually if Canadian dollar is going up, crude is going up, and vice versa. So right now Canadian dollar is going down, crude is going down.
So let's take it off the table. I think it might be best to know when to trade tomorrow, or at least in part market opens. Let's just take that off for a second, Dan. Let's say they were trading tomorrow, okay? What we look, and they're trading ES. All right. I think you'd pretty much tell them they're crazy if they're scalping ES in this marketplace. Is that a statement?
I don't think scalping is a viable strategy to begin with. I mean, the best scalper that I've ever heard of doesn't do it anymore.
Okay. But let's take that off, because some of them are just learning to do it. It's okay. And I agree, right? The money's in the longer time frame holding. I think we took a poll with the members. That's something they wanted, but that's not the question. The question would be whether they're scalping or they're longer time frame holders tomorrow. And let's use ES and then equities. What should they be looking for, Dan, that might tell them things they can get in the market? Right? Like they would feel comfortable with the macros lining up with the technical, or do you just feel in this uncertainty, that just does not exist? That hypothetical just doesn't exist.
I think that I think that number one, trading news without context and without understanding the bigger picture and what's going on is too dangerous, because you're not going to interpret it properly. So to go after news tomorrow and to start doing it tomorrow, or even in the next couple of days, you're not going to be able to interpret it quickly. You're not going to be able to interpret it quick enough. So it's going to confuse you. It's going to twist you into a pretzel. I would say tomorrow, what you should be doing. So I have the chart up. I have it. Everybody sees the chart, right? You see the chart, Steve, right?
Yep.
Okay. Tomorrow's best example of what would be a good move is if we're getting the gap down. Fine. We all know it. If you get something where See, the problem is that you can't even get, you're not even gonna get like any type of move back to where we were yesterday, today. So you're gonna be you gotta be looking for some kind of hammer, something where it holds, whether it be, I would probably say a 15-minute low, but because we have data, it might get a little squishy tomorrow. The problem with ginormous gaps, and by the way, tomorrow is going to be a ginormous gap, is that most of the time we go nowhere in a ginormous gap. So the expectation is for, oh no, all these things to happen, but the reality is completely different. Usually we get contained within, if the first 5 minutes is really, really wide, we usually are contained within that 5-minute bar for the whole day. So you have to really manage expectations, because honestly, the easy money has all been made already. So to think tomorrow that they're going to start pressing this thing tomorrow, they've already made everybody who's going to go and be short, they've already gotten paid. So now it's a question of wait and see, are bounces going to be sold, or is this going to be completely rolled over? What happens when we get to this 5,400, which is the September lows? What happens here is important. And then, but ultimately, I do think that based off of the information that we have now, the August lows are definitely in play or getting close to it. So you could say to yourself, you know what? Does this level hold? And it's not even a level, but does this area of where we held back in September hold? Maybe you could trade against this reference point. But I wouldn't just blindly slap on orders over here. I'd wait to see what happens. See, normally on the difference between this market and let's say a normal market is normally when we get to the 200, we usually bounce off of it really pretty hard. Here, we didn't do that. We hung out around it, collapsed, kind of got back in it, and we're spending way too much time below it, which is telling you that the path of least resistance is lower. Now, does it mean an utter collapse? No, it could just mean that we just time correct from now on and just kind of just build out over here and then try and figure out what happens with these tariffs. I think the market right now is trying to figure out from a fundamental standpoint, and we're going to get to what the technical thing would be, is this it? Is it one and done and that's the end of it? Or does this get uglier and bloodier? If it doesn't and it holds, then you do have certain you could say to yourself, you could even use tomorrow's low, depending on where it is, as a reference point. You don't even need to use 5,400. Ultimately, we're probably going to tag 54.
Yeah,
But-
and Dan,
Yeah.
and Dan, I'm not asking you to share your secret sauce, but like for your the mentoring class, I mean, I know you have a current class in the mentoring class. I know they're doing well because Ray interviewed 4 of them that was very pleased. But the question I have for you, so like what do you teach? I'm just giving you like what are you teaching them tomorrow? Because I know you kind of like guide them
Yeah.
through everything. Like, what's your message to them outside of what you're telling us tonight?
So it's very simple.
When you
So
get
it's
with them tomorrow.
So it's a 12-month program. Okay, it's 12 months. It's divided into quarters. The first quarter or the first 3 months is classroom, where you learn methodology. You're literally learning method. You're learning from soup to nuts, methodology, risk, back testing, everything from soup to nuts, as if you know nothing. Pretend I hired you at a bank or at a fund, and I put you into the internship class and said, okay, I'm going to show you what you need to do in order to work for me at this bank. That's the first 3 months. The next 3 months, you're actually in the live market. You start putting into practice what you've learned in the classroom. Those first 3 months are designed for you to fail. Not fail as in blow up, but make mistakes, get lost. Because you have to learn how to lose properly. That's what you're doing in those 3 months. The next 3 months, you're correcting all the mistakes you made in the first 3 months. And then the last 3 months, you're profitable. It's 12 months. 12 months, you will be profitable. Profitability does not mean $1 million. Profitability means you make more than you lose. Where do you go from there afterwards? How much money you make? Because I get this question all the time. It's always the same question that I get from people all the time. How much money am I going to make? How much money am I going to make? It's irrelevant. It's how much money you're going to lose. If you stop losing, by definition, you're going to make money. Your job is not to make. Your job is to not lose. So we spend a lot of time working on controlling our risk and controlling how much we lose. So even though they're not necessarily trading my money, which they're not, they're all honest. So If I see that things are a little bit tough, and because I can see that we're discussing throughout the day or throughout the morning when I'm in and out in the chat, and I ask them what's going on, take care, truth, have a good night. And I see things going on, what ends up happening is if I tell them, you've had one or two, 2 or 3 losses, you're done for the day, they're done for the day. So I'm also their risk manager to a certain extent. So it's treated as if they were working for me in my group at a bank or in a fund. And it starts as an intern, and then from there they graduate into being an employee. And how much money they're going to make will be dependent on, number one, how much work that they're doing, and they do a lot of work. So these guys are going to crush it. I'm not even just saying because I'm trying to pat myself on the back. I tell this to them all the time. They're a bunch of freaks. I really think so. They worked so hard, and their results and the way that they are is a direct reflection of how hard that they worked. They were a month ahead. They were not supposed to go live until now. They went live a month early because that's just how much work they put in. So they're going to be, as over the course of the next, I don't know, probably 3 to 5 years, they'll be 6 and 7 figure traders, not trading 6 and 7 figure accounts. They will be making 6 and 7 figures. Easy. And easy. Without even a doubt. I visualize it because I know already who's going to do it. Does that
Hey,
mean
Dan, be honest, didn't I think you were full of BS, right? I mean, Dan told me when we were talking, Dan and I guess I shouldn't share that, but I am, right? Because we've been pretty open and honest here. When Dan and I was discussing, and Dan was telling me that he was going to get traders somewhat profitable after 1 year, I don't want to say I laughed at it. I scoffed at him. I'm like, okay, we'll see, Dan, because I know Dan's background. You guys have all heard him speak tonight. I mean, the guy knows what he's doing. He's Wall Street. It was never a question of questioning Dan integrity or his experience, but I just didn't think translate that to other traders. I mean, after 3 months, if you guys go and I posted it in chat, listen to the interview that we did for members. I was
it's only
even
4 people?
I have to Dan. So when you say set 6 figures, Dan, I am scoffing, but you already priced scoffing wrong before, so I won't take it. So
I'll
I
tell.
hope they do.
I'll explain to you how it actually comes into reality.
Sure.
The sizing model lends itself to that because really, to be a 6-figure trader, honestly, it's $500 a day. You make $100,000. You're a 6-figure trader. So it's not like it's not something that's not attainable. Really, what gets people more than anything else is the size. So based off of the sizing model that I have them all using, within 2 years, just 2 years, they'll be at a 60 lot. That's not micros. 60 lot of regular contracts. Within 3 years. So from 3 years from when they started in January, so in 3 years from now, they will be, if they were using full clip and they get to that sizing, they'll be trading anywhere between, depending, they could be trading upwards of 70 to 80 contracts. No, sorry, 70 to 75 contracts, something like that, within 3 years. Full size contracts, not scalping. Yeah, let me repeat that. They could be trading upwards of 70 contracts in 3 years, depending on how they do on the what's it called. And I hold their hands the entire time, so I'm going to know exactly where they're holding. So in anything, we're not just we trade anything that moves. It doesn't matter what the acronym is. It could be crude, it could be gasoline, it could be gold, it could be Australian pig shit. It doesn't matter what the acronym is. As long as it moves, we can trade it. It doesn't matter. The only thing we don't do is we don't do indices. Why? Because indices have a lot of push-pull to them. So from a breakout perspective, they don't lend themselves to breakouts intraday. They really just don't do that. So for that reason, we shy away from it. Do we do it in individual stocks? Yes. Do I have anyone who's doing individual stocks yet in this? No. Why? Because commodities were a lot easier to wrap their heads around, to get the mechanics down first. It's all about understanding the risk, understanding how they could quantify what they're doing and visualize it. And that way it made it easier for them. That's just what they do. Could it work for anything? As long as it moves, it works. It doesn't matter. Again, it's not indices specific because of the push-pull, but that's what they're doing. And that's really, and at the end of the day, I will say this, and this is not, Steve's gonna kill me for saying this, but I'm gonna say it anyway. I speak anyone who I've brought on, I've spoken to them first. Why? Because to be honest with you, it's a lot of time and I don't want to waste my time. I'm going to say something that's going to sound a little controversial. I apologize. I'm looking for winners. I'm not looking to babysit losers. I don't have time for it. I don't have patience for it. I don't want to deal with it. I'm looking to develop winners because for me, I look at it as a way that it's kind of advantageous for me. Now, you may say, "Oh, the teacher." No, I look at it. I look at it very, very different. I look at it in a bigger picture scenario. I look at it as if I could get a bunch of people doing exactly what I'm doing at the same time that I'm doing it. Imagine how potent my stuff is going to become if I have a whole army of people doing exactly what I'm doing. So for me, it's kind of like an advantageous way of me developing people to kind of do what I'm doing so that I can make more money. I know it sounds, I'm not going to trade against them, that I would never do. But imagine me having a little army like GameStop. I use always the example of GameStop. GameStop had this move because there was an army of people all doing the same thing at the same time. That's kind of the way that I kind of look at it for myself. That's like my game. And I'm fully 100% invested in them. 100%. Now you could say, oh, the teacher, yeah, you might be the financial partner. I'm the sweat equity partner. So for me, I look at it as I want you to succeed. And if someone is falling behind, we have one-on-one sessions. Nobody falls behind. I will tell you, is everybody going to succeed? It's not for everybody. But at the same time, it's designed that, imagine you're a lawyer, you go to law school, you get your first job, you're sitting in law for a year or 2 years, and you realize, you know what, I gave it a good shot, it's not for me. You go to bed at night knowing, I don't want to be a lawyer. The way that this is structured is after 12 months, you're going to know whether or not this trading thing is for you or not. It's not for everybody. And that doesn't mean it's a bad thing. It doesn't mean it's a good thing. It's not for everybody. There are a lot of other businesses out there that make a lot more money than trading. Why people like to do this, I don't know. My job as the coach is to give you a fighting chance to be a pro. Whether you want to turn pro or not, that's up to you. You may say, you know what, this is not really for me. I don't want to really do it. I want to just, I appreciate it. I did it. It made sense. I go to bed at night knowing this is just not for me. I want to be a garbage man, or I want to be a doctor, or whatever it is. I'm just making up stupid things. The point is, the reason why most people fail is they don't even have a fighting chance of even realizing what their potential possibly could. I put you in that position of figuring out whether, first of all, number one, I get you in the position of realizing your potential, and then you decide, you know what, is this for me? If this not for me, I want to do it, I don't want to do it. It's all good. It doesn't matter. It's all fine.
So Dan, Dan, I know you mentioned or heard when I was listening to the roundtable that Ray did, they talked about, and I have not taken Dan's course, by the way, guys. That's why I don't know this question. But
Neither did I.
But they very impressed with the worksheets or the Excel sheets you have and some rating system, something like that. Am I making sense? Can you rate if I'm making sense?
Yeah, so before I get into that, just to give one thing, because it's treated as if it's you were working at a firm, we have meetings every morning. So just like we went over the macro over here a little bit, I do this with them every morning. If there's nothing, I tell them there's nothing, I'm not coming on. But we do this every day if it's applicable. So they're fully aware of what's going on before. And again, it's treated as if it was a real desk. Now, part of what they do, and they didn't believe me at the time, they believe me now, is I don't trade off of charts. To me, I don't look at this. To be honest with you, I could care less about this. I look at this at the end of the day. During the day, this is meaningless to me. Literally meaningless. Because what am I sitting here? I don't tick watch. I could care less. But I need this information for work that I do at the end of the day to allow me to be prepared for the following day. So everything I do is based off of spreadsheets and based off of volatility and risk. And everything gets populated into these custom designed sheets that were designed a certain way and tweaked a certain way to give information that everything that you need is there. And everything that you need to do is there. And if it's not there for the day because of just the risk isn't there, then they do nothing. It's that simple. And they're learning now about not trading off of charts. Now I'm going to tell you, they're 3 months in. They just finished class. They literally just finished. And they are miles ahead of where I thought they were going to be. And this goes for all of them. But At the same time, that doesn't mean that that there's not struggles. It's just like anything else. There's struggles because when you go into a live market and you've been a sim trader or you've been in one of these programs which you're not in the live market, everything is different. Your fills are different. All of a sudden, there's extra costs that come in that you're not prepared for. You could be a gross positive trader, but yet be net negative because of fees. So or you could be sitting there and putting out these orders that you don't get filled on. And I tell this to them all the time. And if you want, you can ask them. And you can even ask Steve. If you can't do it with a 1 lot, you can't do it with 100 lot. And the hardest thing that they had to do was trading 1 lots. Why? Because when you put on size or 2 to 3 lots or 4 lots, the P&L is very deceptive. Because you have 2 to 3 lots, you think you're a profitable trader. But when you have a 1 lot on, that's when it kind of separates the men from the boys. Sorry, Lisa. So, it becomes more of really knowing what you're doing. Again, they work on that skill. They work on all of that so that when they come in, they're ready to go. They don't need me to handhold them. In the beginning, obviously they're learning. That's a whole different story. At this point in time, it's questions and it's a whole different type of conversation than it is, buy here, sell there, et cetera, et cetera, et cetera. That's just not it's not treated like that. There's no memes, there's none of that bullshit. It's all business, literally all business. And that's the way that's why they're successful, or they're on the path to being successful. They don't look at things through the eyes of a non-professional trader. I don't use the word retail. I don't like that word. I like pro and non-pro. That's just me personally. They look at it purely from the lens of a professional trader, someone who's working at a bank or a desk. That's how they view things. That's just the way that we go about it. So when they're looking at things, people quote off levels, they don't even know what it means. They have no idea because they don't care. It means nothing to them because they just know what they need to know, and meaning what they need to be successful. Everything else to them is just noise. We don't look at candles. Candles are noisy. There's no reason. I keep it up because most people are not familiar with bar charts. If someone had a bar chart, they would have no idea what you're looking at. We keep all the noise out. We keep all the emotions. Everything is just pure data and methodology, and we go based off of volatility and direction. That's what we do. We do it every day. Do we have great days? Yeah. Do we have bad days? Sure. It's like anything else. Does everything work 100% of the time? No. And anyone who tells you that it does, run. Because anyone who's successful 100% of the time, run. Run as fast as you possibly can because it just ain't true.
All right. I see some people typing. Anyone have questions for Dan? And I did post a link, guys, in the room. I just appreciate
You know what?
guys just taking a look at it. Dan, I really appreciate, your take on the market. And disclose, you guys, I don't necessarily trade the same way Dan trades. All right?
1 second, Steve.
Hold on.
Saeed, does this look to you like a candlestick chart? This looks the same to you?
Who are you talking to? Oh, Saeed.
Saeed, yeah. Does this look to you like a candlestick chart?
Yeah, it's the same thing. It was in the 90s when they started off. Mostly they were like this bar charts, and it has the same high, low, and it has a closing. So the open is on the left side, and the closing
I
is on
agree.
the right.
I agree with you, but emotionally, does this look the same as this?
Yeah, but
Emotionally?
but if we see about the technicality of the stuff, usually like if you like most of us, like the non-professional trader that I would say, because you and most of the other guys, they become in the professional category. The non-professional traders would be thinking about the body to be like where the momentum is getting in and where the closing is. Like, for example, I can give you an example for today. If the market closed and we have an issue, we have like a news coming up after the market, right? We have a good push down.
Right.
And once if we see it in the Globex, right? The first 15 minutes of the candle, if you draw the top and bottom, the market exactly moved 50% off the low, and then it started to encroach into it. Now, if somebody is trading off even a bar chart or even a candlestick chart, it would show exactly that the moves are there, algo generated, are going from one point to another point, taking out all the stops and all the liquidity. Whether it is going towards the lower side or the upper side. And that is the reason when the 15-minute candle, if you draw the top and bottom of it, the market moved exactly 50% of it. And then when it moved back into it, it just make to the top of it now. And it happened exactly at the hour, which is important. Like now we are having China opening up. So just before that, it just tickled the top of it. And now we are again half of it, right? So
Right.
For example, if you are seeing it's this one bar chart, so bar chart was not of course it was in the 80s and 90s. Everybody was using bar chart before the computer
Yeah, before
started.
Neeson came up with this.
Yes,
100%.
and the Nissan, and it becomes more like visually appealing to the new trader. So this was just my point.
Okay,
yeah.
I want everything you said. I agree with you 100%. Well, let me ask you a different question. What's going to get you to do something quicker? This or this? What's going to get you to act impulsively quicker? The first one or this one?
Sir, because I have always like started off with the candlestick, maybe that was like more. But if you are asking me right now, because I can read both, so for me, yeah, it's easy. Even this one is very easy.
No, but I'm saying is okay, so you're the exception, but let's say you weren't the exception. Okay.
Yeah.
What's going to act, what picture is going to give you, is going to make you act more impulsively quicker? This one or this one?
I think the red one, the green and red one is probably more makes you impulsive to move that. Okay, it's going in your direction. Let's jump in, or let's towards the upside, or let's jump towards the downside. But you have like very good thing, which I love, is the EMAs that you have up like there. So that makes it more sensible that even whatever the candles are, at least you know on which momentum you are jumping in.
Yeah, I don't disagree with you. No, I don't disagree with you. And by the way, he's not saying anything that's wrong. He happens to be 100% right. He is 100% right. However, the way I kind of view it is, if I'm going to look at charts, then I want something that's going to allow me to see things objectively. When I look at this, it's objective. When I look at this is just me. Maybe other people are different. It could be. I don't know. This to me becomes very subjective, because now you're looking at, you've got red candles, green candles, up, down, it's all visual all over the place. You're like, oh, well, it makes you, all the objectivity gets thrown out the window. Why? Because I'm a believer, and this is just me, that if everybody can see it and everybody can do it, it can't work. So if everybody can see a head and shoulders clearly, or whatever, a cup and handle, or whatever, or an H, or whatever pattern you want to look at, if everybody can see it, everybody can do it, those are not the trades you want to be in. That's just me. That's the way I operate. Why? Because one of the things I look for is, I look for where people are caught off guard. That's one of the things that I look for. So for example, today, the entire stock market is caught, well, the entire world is caught off guard. This is like one big giant, what I would call fire trade. Can I take advantage of it? No, I don't trade during Globex. So I look at it a little bit differently. I look at it, I'll use this example. It's an example I use a lot, but I'll go through it again. And I'm actually going to ask you this question, because you made me think, so I like that. You ever gamble? You ever go to a casino and gamble? Saeed, I'm asking you that question. Anyone else can answer it also. I'm asking you. You ever go to a casino and gamble?
Never been to casino in my life.
Okay, fine. Have you ever gambled in your life?
No, never.
Okay,
Maybe as a
fine.
childhood, I might have bought some lottery ticket from the
Okay,
village
fine.
shop.
No problem. Let me ask you. I'll go. Don't mute. Don't mute. Let me ask you a question. Okay.
Yes, sir. Sure.
What would you say the house's odds are in, let's say, Vegas? What do you think their house's odds are?
So basically, what I read about it, that there are like red and black. They are red. There are two kinds of color, but one or two colors are more than that. So basically, they have an odds of 52 to 48%. The casino, and over large sample size, they usually make the money. And this is
Do you say
how.
48%?
Yeah, this is what I read somewhere, right? In the books, usually they mention it because I have not
Okay.
been to that, so I cannot calculate for sure. But this is what I have read in the books.
No problem. Let's ask the group a second. Group, what would you say the house's odds are? Saeed is saying about 48% from what he's researched. What
Well,
would you say the house's
52%
odds are?
52% in they have in their favor the house.
No, not 1,000. Give me odds. What percentage? Overall. I'm gonna blow your minds. Oh, come on. Don't give me an odds. Okay, with the game. Overall, give me an odds. Don't make it complicated. Simplify it. Steve, is that overall or is that just on one thing? Give me overall. The house's odds overall is less than 1%. Huh? The house's odds overall on every single game in the casino is less than 1%. So how is it possible that on a slim margin of less than 1%, they're able to build these monstrosities to society? They have all you can eat, they have all this stuff, bands playing all this. How are they able to afford it on a 1% or less margin? How are they able to do it? And they comp you, right? And they make and they're comping and the hotels and this and that and all these things that they're going on, right? How do they do it? Volume. Because they know that the longer you sit at the table and play, the more likely those odds are going to revert to them, where it's going to be 99% in their favor, 1% in your favor. That's how they do it. So let me ask you a question. If you're the guy who comes in, you're a high roller like Steve, and you come with $1 million and you put $1 million down on the table, you say, I'm betting it all on one hand. Did they like you? Would they like Steve as a customer? Absolutely not. Exactly. Absolutely not. They would throw him out because they don't like him because he only bets once. But if, let's say, Saeed came in with $1 million and he was playing all night long, he's their best friend. Win, lose, or draw, he's their best friend. So that's what I do. I'm the house. I don't put on 1 million trades a day. We don't do that. Our win rate typically is about 35%. So when we lose relatively small. But when we win big. We're in the business of making good bets. That's what we do. So really, we could take 2, 3 losses, 4 losses, 1 win licks the whole thing up, and then some. And that happens to us consistently. Paul Tudor Jones, the Holy Grail. Do you know that he was the richest man in the world in the early 2000s? I'm sorry, the richest man in America. Do you know what his win rate was? Who wants to take a guess what Paul Tudor Jones' win rate was? Anyone want to take a guess? Take a guess what his win rate was. Less Cobb, less Lisa, much less. %20, exactly. His win rate was 20%. So why was it that the world gave him money? The world gave him money. Why? To manage. And he's only right 20% of the time. A little bit more than that. Because it wasn't so much about how much he made. It was how much he lost when he was wrong. So when he was wrong, he lost very little. He never lost more than 6% in anything. He was down 6%, he cut it, he moved on. So he didn't need to be right a lot. He just needed to be right at the right time. So when he was wrong, he lost a little bit of money. Big deal. That's how he became. That's why the world gave him money. That's why he was the richest man in the world. The richest man in America. Well, remember, when you're looking for 5 to 1, okay. You have to understand something. In 2000, 25 years ago, you have to remember something, that prices weren't like this. The S&P was not trading at 5,000. So a 6% move in a $1,000 instrument was not a huge amount of money. institutions don't look at things in terms of dollars. They look at it in terms of percentages. A 1% move in a $5,000 instrument and a 1% move in a $5 instrument, the dollars may be different. It's still the same it's still the same 1%. It doesn't matter. So you can't look at it in today's dollars. You just can't. You understand? It's very different. You know, S&P back then was what? I don't know what it was 20 years ago. And oil was trading $23. So $23, a 1% move in a $23 instrument versus a 1% move in a $70 instrument, the numbers are going to be bigger, but it's the same 1%. You understand? Very different. You get the difference? What other questions do we have? Yeah, I wish. I wish I could fill up for $10. See, what other questions do we got?
I'm good, man. What are we, over 2 hours, Dan?
Yeah.
Any question, guys? We do need to wrap it up here. I'll post those links. Once again, once this ends. I know you guys probably have questions for Dan. Feel free to, don't overwhelm Dan, but Dan is pretty good at answering questions. So feel free to DM him. But if you have any questions, guys, get it out. I mean, he'll answer it. It doesn't matter what the question is.
I will.
I guess the question I have for you guys is this type of mansion session in the evenings with Dan or even others, but let's say Dan, is this a value? Did you guys get value from this tonight? Whether you look into taking his course or not really doesn't matter. Did you get value? And if so, saying yes, what's the value? Just that really helps with our feedback to know what you guys specifically got value out of. So if you can expand on just the yeses, be great. And you don't have to do it right now.
While you're typing, I'm just going to say one thing. So we're starting registration. I want to make sure I'm very, very clear on this. We're starting registration. We're ending registration. We're starting class on Sunday. Once registration is closed, I'm shutting it down completely. So once I close it, I close it. Once I do that, you'll notice that I didn't do mansions in the beginning because once I'm there, I'm basically devoted to them. My time is literally, my free time is devoted to them. So, you know, if you're interested, that's fine. It's not, you know, no pressure. It's up to you if you want. It might not be for you. It's fine. Whatever. I leave it up to you. You have to be comfortable with the decisions that you make. But I will tell you, last time I did have people come to me afterwards and I had to turn them away. So if you are thinking about doing this, I'm telling you right now, once we start, that's it. Then the train has left the station. And I don't want to be a jerk about it. I'm just saying is because it's not fair to anybody else. So it's kind of like once I'm there, and then it's kind of like, you know, sorry.
No, I can vouch for that because, you know, I'm like, Dan, come on, we got to let this one in. He's a good guy. She's a good guy. You know, they'll be a perfect student for you. And Dan was like, nope, sorry, Steve. You know, so I mean, I had to respect that. I mean, Dan just wants to keep his classes small, and he doesn't want to cut corners by allowing others in after the classes started. So I got to respect that. So
You cannot do COVID to tariff. It's not the same thing. COVID was a complete and total shutdown of economic activity due to supply chain, and it was basically a medical emergency that the world was shut down. Tariffs is not a global shutdown. It's just higher prices. So it's not, they're not the same. They're not one and the same. You cannot correlate them. You cannot correlate them to each other at all. You cannot use tariffs in any other, there's no other situation that equates to tariffs. You can't even use inflation to tariffs because inflation would subside. This is not going to subside. This is a pure policy shift.
Okay. Any more questions coming in, guys and gals? You know, Dan, I'm a pretty much just a strictly technical trader, Dan.
Mhm.
You know, been for about a decade. I must say, I got a lot out of this class tonight. You know, and I've been mentored by some who would considered, you know, great analysts, great minds out there, but I got a lot out of this from a macro perspective that I could definitely combine with my technicals. I loved what you said about macro fundamentals plus technicals equals solid opportunity. That really, really resonated with me personally. So thank you for that.
You're welcome. If you guys can marry your technicals with what the fundamental backdrop is, home runs. They're home runs. Literally just home runs. And some of them can be, you can even be grand slams. You're not going to hit grand slams in the futures markets. I'm not going to pretend to sit here and tell you tonight was a grand slam, but this is not, this tonight is not a what's called. You'll hit grand slams in the stocks and equities. You won't hit grand slams in futures. They're not designed that way. They're not designed to do that.
Yeah,
Whereas, yeah,
do retail traders pretty much trade the future, not just ES, or is it institutional?
say that again.
In not just ES, any futures and any in general, would you say most of the players, institutional players?
So in the ICE
Or
markets,
combination?
softs, it's pretty much all institutions. There's very few people who are not institutional based in there. You'll get a few, but there's really no algo there. In the grain markets, you have more humans there than you'll have because liquidity is a little bit of an issue. You get really algos in more, or what's it called, or more non-professional traders who are trying their hand in indices. They think it's a low barrier to entry to the stock market. Why? I don't know why. They go there a lot. They'll go to oil.
25,
Huh?
Dan.
Margins are, make it more advantageous. They'll go to oil. They'll try their hand at gold, and that's pretty much where they'll go. They won't go to anything else.
Gotcha. Gotcha. All right. I don't see any more questions, so
I will tell you from broker friends, I've mentioned this in the past, more they close more accounts because of NQ traders and MNQ traders than anything else. Most of the people who lose money in indices. NQ for sure, but most of them lose. Most of the accounts they close are because people blow up in indices.
I can tell you right now, in our NQ rooms has the greatest winners and the greatest losers. And it's not 50-50 ratio either. But I think that's going to be it. Hey, I want to thank you for attending, and I want to thank taking time out of your busy schedule, providing, especially tonight when we have so much news coming out with tariffs and apparently additional news coming with the Republicans starting to break away. It's an interesting evening, but it's going to make more of an interest. Be safe, guys and gals. Thanks, Dan.
Yeah, for sure. All right.
All right, guys, I'm going to shut it down. Have a great night, everyone.
Very good. Have a good night, everybody.